Welcome everyone to the Kendall Report. Remember to subscribe, like, and share these videos. Before we get into tonight's content, I do want to direct you to the link that's on this page and talk to you a little bit about the WaveTech indicators that are being offered on TradingView. I think this is important for you to know about because so many people have already signed up and got these indicators. They're perpetual, there's no subscription. You also get access to our live trading room for 30 days included. So make sure you go to this link and check this out. There's so many positive feedback that we're getting and people talking about the money they're making. Real quick, there's multiple indicators. There's a cycle finder, WaveTech cycle finder, WaveTech Fibonacci projection tool. This helps you to set up swing trades and come up with some really accurate price projections. And then we have the market grid. Everybody knows the grid. You watch it every night probably to get that. Now you can have it on every symbol. We have the webs. Those are a very unique pattern recognition tool, especially for intraday trading. You find out about that by coming into the live trading room, and there's some videos that I'm putting out understanding how to use those. Finally, we have the pattern finder, which is great for Elliott wave analysis and swing trade analysis, and that will also benefit you substantially. Then, of course, we have the classic PPM 1, 2, and 3, and the WaveTech 200. These will give you the insight that I talk about every night. You'll have these indicators on any market, anything you want to look at. So go ahead and go to the link, kendallreport.com/indicators. Find out more on how you can get started in the live room and get these indicators for a one-time fee. Thank you so much, folks. Let's go ahead and get into tonight's video. So yesterday in the live room, we were watching all of the activity. Markets came in higher and sold off and just continued to collapse right into the lows with about an hour and change to go. We were down well over 1%, and all of a sudden we got the big rally. I'll go through all the details here in a minute, but a couple things I want to talk about before we get deep into tonight's analysis. That I'm not going to be covering the data like I used to. This is a pre-recorded video. I'm trying to get more efficient on my time. There's so much stuff going on right now that I need to deal with. So I will cover that. I will send out a tweet on what those ratios were. So make sure you follow me on Twitter. It's Twitter/Portfolio Expert. No E in the expert, just portfolio and then the expert. And that will get you to my Twitter handle. And you'll find out about the data at that point. So the other thing that I want you to know is I'm going to cover things much more succinctly and quicker than I have, trying to get these videos a little bit shorter, but still get plenty of information out to you. So let's go ahead and talk a little bit about what happened yesterday. S&P ended up 0.57, NASDAQ up 1.63, and the Russell up 1%. And this was a huge reversal rally. Now, the big question that folks are going to be asking, was that it? And I'll go through that in the technicals here in a minute. But we had a number of things come out. We did see tech stocks up 1.6%, 2.4% on the services, and consumer services were up at about 1.7%. So everything was doing quite well yesterday, with the exception of real estate, which is down 2.6, consumer stocks down 1.3. So the mixed picture that's being told here is that the economy is flattening out. Somehow tech stocks are going to be okay. Maybe I don't know what the anticipation is, but I really think this was just some bargain hunting going on in tech stocks and some really cheap stocks. Will it last? I don't think so, but we could see 2 to 3 days of a rally, and maybe it was something more substantial as far as a reversal goes. But like I said, I'll go through that in a few minutes. We have some reports coming out tomorrow. We've got the factory orders expected to be up 1.2. The JOLTS are coming out, the 11.26 million jobs available out there. So that's going to continue to show a very tight labor market. As far as other things that came out yesterday, is ISM manufacturing was at 0.55, 0.4. That was expected at 58 plus and just missed big time. We also saw construction spending come in at 0.1. That was well off what was expected. So this is what I'm talking about, is we're seeing activity in the economy starting to really just screech to a halt. And these sectors that were in play today weren't really looking to the economy for any kind of boost. And I think we're going to be continued under pressure. There's a couple things that happen. I'll go through here in the technicals here in just a couple minutes. But just very quickly, there is one feature that happened in today's sell-off. As we got into, there was no liquidity. So everything traded down on air for the most part and traded back up on air. We watched a rally from the 40.65 level all the way back to 41.40. So we literally watched a 60-70 handle plus rally just on full right in front of our eyes, and it was within that last hour, the context of the last hour. Now we're seeing a little weakness overnight. So let's go ahead, and it won't take me long to get through this video, so we'll go ahead and cover the S&P here. So as we look at the S&P, as I mentioned, we did have that big reversal. We traded down just about to the S3 level. That number was at 40.33. The low was 56. We're just slightly under S2, in between S2 and S3. I talked about last night maybe seeing a big broad volatility. I thought we'd see an S1, maybe an R1, which is basically what we did until we broke down in mid-session and we went down to a little bit below S2. So we're looking at the high yesterday was 41.65 and R1 was 41.56, and then S2, as I mentioned, was 40.65. We printed down to 56 and then saw that big reversal, and we did manage to close higher, as I mentioned. But now what we're seeing is some just kind of waffling here. We're down 350. We were down about 10, so the market's just kind of stable here from that standpoint. What I want to show you here quickly is on the monthly chart. The monthly chart, we go back to the February. It was actually February 25. We saw the low at 40.93. So we printed through that low today, rebounded immediately and closed back above. And the 21 period moving average, I've been talking about this for the last couple weeks. This is on a monthly basis now, is 41.14. And we got above that. We are looking at a ppm at 0.83, so there's a strong probability that we'll stay above that level. If we look at the numbers from a market grid viewpoint on a monthly, 40.12 would be an extreme, R1 42.42, so that's a pretty decent rally from here, 100 points. Possibly we could see 43.70, but I think what we're likely to see this month is an actual close lower and possibly close under 41.14. We'll just have to watch this. It's obviously the first trading day of the month, so a little early to making a call on the month right now. We're just looking at this range right now. Expectations probably 42.42, minimum downside 40.12. The next level 38.84. That is coming into some pretty key levels. That happens to be the 10-quarter moving average. So that would be a significant event if that happened. Like I said, second day of the month, hard to make that call at the moment. So the next market I'll talk about is the NASDAQ. NASDAQ also experienced that reversal. The range yesterday, we had 12,609, S2 12,604. Sorry, that was 12,709, and the S2 was 12,604. So we came very close to an S2. R1 12,969. We printed just above that, almost to an R2 13,100. We're looking at today, the PPMs are still very negative. Now this is the daily, minus 0.86, minus 0.62, and minus 0.04. So we're just seeing these averages roll over pretty big here. And what we're looking at from this standpoint, 13,308 is a major number. We got PPM1 down to minus 0.86. That tells us there's only about a 20% probability to get above that level. So any rallies is up to 13,309. We're 13,067. That's probably where this rally, if we do continue, will set up. So we're probably looking at the potential of the market going up from 1 to 2 days. Last time I had that expectation, it went up from 1, it reversed down. We're likely to see that same thing happen here again, where maybe the trend just fails. There's a lot of anxiety coming into this Fed meeting, so we'll have to see how that sets up. The Russell also experienced this same reversal pattern that I was just talking about in the NASDAQ. The low yesterday was 1839, S2 1837, so we printed pretty much exactly an S2. On the upside, we saw a high of 88, which put us right at the R2. So we had a little more volatility relative to the market grid right now of S2, R2 on the upside, and the PPMs are not nearly as negative. I've been talking about this for a while. This pattern still has the probabilities of moving higher. We look at the market grid for tomorrow. 1897 is R1, R2 would be 1912. We are seeing these PPMs starting to turn around here, so it could get interesting over the next couple of days. And we maybe, I've talked about this before, is that it's possible that this Russell could lead us off the floor of this market. The fact that we printed down on the S&P below that February 25th low and then reversed is significant. There's a lot of things that are setting up here. So we've got a big week ahead of us with earnings and FOMC and unemployment, you name it. It's all out there this week, plus plenty of other numbers of out there on the economic side. I mean, we've got 1,500 earnings reports coming in, and it's going to stay interesting all as we go through this week. So the next market I'll cover is the 10-year. And this was interesting. After today's close, we got a new upward target. I've been talking about these targets that we had over here, which were 313, 346, 369. Well, this pattern is closed yesterday on Monday, actually represented and signaled a new high yet on this from a Fibonacci viewpoint. 3.36, 3.61, 3.76. This is going to get very interesting. 3.25 was the taper tantrum high, and I thought we might get some sideways movement here, but we're looking at PPMs and they're exploding. So all of a sudden, maybe what's coming out of the Fed isn't going to be as friendly as some people think, but it is definitely showing a lot of upward momentum. We did get an RTX sell signal yesterday, suggests that we'd go sideways, but sideways is based on the grid is really not that sideways. S1, S2 would be the targets. That's 297, 295. So there's support immediately here, and we're seeing, like I said, the PPMs turn up substantially here. Real quick, the last thing, just to look at the yield curve. Yield curve continues to be stable, so we're no longer in an inversion, and this pattern is still pivotable, whether it's going to go back to a flattener or whether it's going to continue on a moderate steepener. But if we can get over here and get up above 0.15, that would be encouraging, actually. And this is something that I talked about that you need to pay attention to, is if these rates surge and we get a flattener going, that could be a problem. Well, we didn't see that happen. It actually upticked just a little bit, nothing substantial, but nothing really to worry about either. Next market we'll look at here is the crude oil. Crude oil continues to be really sideways. We're at 105.25. Yesterday, it looked like we were going to decline, and we rallied right back, closed on the high of the session. And like I said, I know it's a broken record, but this is the range we're stuck in here. 96, 106 is going to be the range that we're going to continue to trade in. I just don't see us getting out of that. PPM's actually ticked up yesterday, so there's becoming a little bit more of a bias to the upside. Next market I'll cover is gold, and gold's hard to talk about upside right now. We absolutely got hammered down here to the 200-day moving average. The yesterday's low was 53. The 200-day is 1842. So we're all of a sudden down there. The only encouraging thing is, with still a flat market overnight, we're seeing the PPMs turn up, and we just continue to see this market bounce back towards 1900. But it's tough to be bullish here. Just a quick look at the weekly patterns. You're going to see this is what I've been talking about probably for the last 3 weeks, is that PPMs are starting to deteriorate. PPM 2, 3, everything's rolling over. All of a sudden, this market, you would think, would be reacting to inflationary tendency. So the rhetoric that's out on the street right now is that inflation is peaking. It may be, but what does that mean actually? Are we going to stay above 5%? What is it? Meanwhile, corn futures and a whole bunch of stuff are printing at all-time highs. So if you cook the books like the government does on these inflation numbers, maybe you can come up with a peak. But I think what we're seeing here is just posturing by the Fed, posturing by the media, just trying to talk down this stuff. Part of the issues with inflation is forward-looking expectations. So they're trying to build these expectations to be, okay, we've hit the peak, it's going to get better, right? Will it get better? I'm not sure. I've talked a little bit about the events in China right now, lockdown, maybe another surge of supply chain issues. I think there's still a lot of variables out there that aren't necessarily going to be friendly when it comes to the inflationary scenario. But for sure, whether this market's being manipulated or what's happening here, there's no positive VIG in this market in gold, and gold continues to be under pressure. It's quite surprising, especially after the pattern that we had 3 or 4 weeks ago. It was set to run, and then we got whacked. So if the bonds are going down and yields going up on the basis of inflation, maybe that's kind of a mixed picture when it comes to gold. Final market I'll cover tonight is the Bitcoin. Bitcoin's down 172. I'm actually pretty impressed with how well it's held up. It didn't really sell off much during the sell-off in equities today, and it didn't rally much either. We look at this is weekly. We've been in the same range, just kind of drifting lower for 4 weeks now, and ppm 1 is actually turned positive, and ppm 2 is not far from it. Where we're going to need to get on Bitcoin is above 41.5. If we don't get above there, then we're just going to continue this sideways range, and there is some vulnerability to the downside, which I'll show you right here on the daily. And the daily, there's some Fibonacci projections down below heading for 33,345. The grid is really tightened up. The volatility has been so low on Bitcoin that the grid is almost impossible to really read. I'm going to blow this up for just a second here, and just so you can get a feel for it. Even when I blow it up, is very big, 33,345, but we're really just trading within the grid back and forth each day. If we do get down below the bottom end of the grid, 37,344, we might be able to see some acceleration down toward this Fibonacci pattern. Well, folks, this will do the video for tonight. I hope you enjoyed it. I'll continue to do this format, and I think it'll be much more efficient. So have a great day trading on Tuesday, and we'll see you tomorrow night.